And this is the digitalization of real world assets. That's the finance industry. We're seeing the announcements almost every day. We're seeing new on-ramps and off-ramps via the ETFs. They're coming. We're seeing, we will see, regulatory changes across the world. That's happening. We're going to see brands and culture. We had conversations on that. More about art and new use cases for NFTs. That's coming. New use cases for DeFi. New ways we're going to do that. That's coming. New layer 2s, layer 1s, changes to things like the Solana ecosystem. That's all coming. So I think we're going to see a kind of full-on crypto cycle when it really gets going. And your head will be spinning a bit with all of the stuff that's happening, because so much has been built over the bear market that things are just coming to market. The Academy, that's another superpower for those of you who aren't aware of the Real Vision Plus tier. We have an entire education suite of products, from everything you need to know, from position sizing, risk management, how to research ideas, technical analysis, then courses from the leading technical analysts, courses from me on the business cycle, and now we're just introducing the crypto course as well, of which you saw the first part. I mean, there's no excuse not to get up and level up and understand how you can empower yourself in that journey. If you give yourself that gift of education and then support yourself with AI, the tools that's on the platform, and then the network of people around you, it's a game changer for people. So yes, there will be some large standouts. Don't forget, Ethereum is a very big ecosystem. Could you think of that as like a Google ecosystem? For sure. Chris Berniski at Placeholder VC wrote an article that Ethereum is Android and Solana is Apple. That's another way of thinking about it. So I think, the protocol layers themselves are big. Who else is going to build social media apps? Who's going to build all of this stuff? There's a lot that's going to happen here. So I also think we'll get adoption by Meta, adoption by Apple, adoption by everybody. So look, basically, this is just digital rails, and everybody's going to use it, from the finance system to your social media app. So it's coming everywhere. You just don't realize it yet, but it will. Obviously, we've had it at protocol level. So these massive networks like Ethereum, Solana, all of this stuff. But there will be companies as well who build the applications layer. And we've not seen that. So what we've built is the internet, but we haven't built the applications layer yet.
This is why the
applications layer was Facebook and Google. Yeah. 2 years' time, you'll have a much better idea than you do today, because we're still in the quiet phase. So no application really gets traction right now. It could be a gaming company. That's another big bet a lot of people have got on. So who knows? And that's exciting, right? So with this, you don't need that much going in to make it 50 trillion. You don't need $50 trillion going in. But, if you put in $1 trillion. So really, if you think about it, I think of it as the crypto economy as a digital network state, borderless. And what you need is foreign direct investment to come in. So one of these trade agreements will be the ETFs. So if you think about it, that's a trade agreement between the traditional world and the new world. And so the money will flow in. So let's say 20 or $30 billion goes into that. That'll move the market cap by $200 million, a 10x multiplier. I don't really know the numbers of the multipliers. But don't forget, if you start putting the financial system on top of these rails, that generates economic activity at blockchain level. So Ethereum earns more fees generate into the system, all of these kind of things. So I don't think it requires all the liquidity in the world. But again, my 50 trillion number is probably 2030. So we've got time to get there as well. I'd look at to peak out at, whether it gets there or not, doesn't really matter. But then, so that's a sort of a 10 trillion is a 10x from here and a 3x from the high. The next time around, if it goes from 10 trillion to 50 trillion, is a 5x. It's actually a lot less over time. So it's all doable. So the easiest way to start is open a Coinbase account. But then you've got the risk of having an exchange. Now, Coinbase is a very good exchange, or Kraken or whatever. The next phase is, okay, if you want to self-secure your assets, which I think is a really good thing to do, the right thing to do, you just buy a ledger device. Simple as that. So you execute it on your Coinbase or Kraken or whatever, you transfer it to your ledger, that's it. You know, it's like in the gold world, you could do the same, but you'd have to go and set up a gold storage account, and it's a pain in the ass. This little electronic device costs you very little money, changes your life because you're in control of your assets and nobody can take them from you. What happens is when you're engrossed in markets, particularly in bull markets, or even in the really worst parts of bear markets, you tend to get sloppy with your operational security. You kind of leave things on an exchange. You're clicking on a MetaMask because you desperately want to get this NFT and you click the wrong link. And you really, really have to get your operational security cleaned up as fast as possible. And just think before you act. It's really important. And a lot of the people just did it by mistake because they're rushing to do something, or they think it's free money on the table. You know, generally there's no such thing as free money. So when you think there is, you're about to be somebody else's lunch. I'm not aware of Coinbase getting hacked in any meaningful way. So the probability of you getting hacked on Coinbase, very low. And so therefore, for now, so just don't, understand what risks you're taking and don't make it too complicated for yourself. Just choose a safe place to put your money. That's okay to start, as you said.
And get familiar.
Get familiar, and then you can go to the next step. You don't need to do everything all in one go and overcomplicate it either. Every time, we produce this chart of all of the previous inflations. At this point in the cycle, you always get a small uptick, which is we're seeing now. Why? Well, it's pretty straightforward. It's generally a year after the peak of the commodity down cycle, and commodities are usually just starting to discount the upcoming cycle. So the commodities at the fast end of the curve, they bring inflation down in the beginning. So they brought it down from 9% down to 3 and a bit percent. Then they pick up because they start rallying a bit. But the slow parts, the massive parts, 70% of all of CPI is rents and wages, and they're starting to deflate. So at this point, you get this little pickup, and then the big juggernaut carries it lower. If you look at the core inflation numbers, if you look at the 1 month, 3 month, 2 month rates of change, they were all around 2% or less. So what you're seeing is clear, firm evidence that all of this stuff is slowing down. So just be patient. These things take time. But yes, I see nothing but disinflation ahead for probably another year.